Welcome back, everybody. Trading Nevesh here. In today's video, we're going to do a step-by-step trade breakdown of this position that made 5R in 12 minutes trading inversion fair value gaps. Now, it's not often we trade inversions, but if they are A+ and have met every single requirement, we can engage. So don't worry, we're going to break this down in detail alongside the entry and exit criteria and, of course, the bias. So let's begin. Now, on the left-hand side, we have NQ. On the right-hand side, we have ES. First things first, we want to make sure they're correlated. And if they're not correlated, we want to find SMT in line with our directional bias. Now, what is SMT? Very simply put, it's when, or at least in a bearish sense, NQ makes a higher high and ES makes a lower high. This is bearish because how markets move when we are bearish is if we make lower lows, and lower highs. That's how an asset will decrease. Now, if we were bullish, we would want to see ES make a higher high, whilst NQ makes a lower low. But you can see here, I took a short because of the 4-hour bias. Now, before we get into the bias, a very important requirement is that the pattern, or the inversion, happens with inside a macro. Now, the macro that we were trading today is 13:45 till 14:15. This is called the lunch hour macro. Now, there is a few more macros you can trade, and a macro is the first 15 minutes and last 15 minutes of every hour. Now, the other two, or other three, should I say, they're actually high probable, are the first 2 a.m. macros, so 9:45 to 10:15. The first, and the second is 10:45 to 11:15. Now, there's also a pre-market macro, which is 8:45 till 9:15. This is only valid if we have 8:30 red folder news. Now, this is all based off New York's time, so you can do the conversion in your local time and just make sure it fits NY. So just check 9:30 Oakland is New York's time. Now, going back, let's go and find the bias. Why was I even bearish? Now, on the 4-hour, this is very simply put. I've made this so simple so all of you can follow this. There's no reason you can get confused, apart from probably this scenario actually today. Now, the first step to gauging if we are bearish or bullish, what we need to do, we need to mark out the 4-hour high, the previous 4-hour high, and the previous 4-hour low. Do bear in mind, this candle still had not opened yet. So we mark the high and mark the low. If we sweep the high, we're going to look to sell. If you sweep the low, you're going to look to buy. That's first step in gauging if we're bearish or bullish, which we see here. We swept the high. Now, the next step is to mark out the closest bearish and bullish PD rays, which are fair value gaps and inversions. So let's do that. We've got a bearish gap here. And we got a bullish PD ray here. Okay, this is an inversion. It used to be a bearish gap. It got disrespected. We can now use this as an area where we should see buying pressure. Let's change this to bullish. Now, in this scenario, I want you guys to ask yourself, would you be bullish or bearish? It's a little bit confusing. The correct answer should be more neutral, but we do favor being bearish. The reason for this, price has swept a high inside a bearish fair value gap that will overpower just simply tapping the inversion, because yes, this is bullish and we're trading inside it, but we still have not swept the 4-hour low. Okay, so this is slightly stronger in terms of being bearish. So let's go back to the 1 minute. Let's go and cover, well, why was this an A+ inversion and how can you identify it? Now, on the 1 minute, first of all, you need to make sure you're in the macro, okay? Second of all, when trading an inversion, let's replay, which an inversion is a break in this sense, because we're bearish, is a break beneath a bullish gap. That's an inversion fair value gap. Now, when trading these, first, we need to make sure we've took out liquidity, which is simply put, taking out a short-term high, right? The market moves higher highs, higher lows. Above all these swing points are people buying it and selling it. That's how it's moving up and down. So we need to make sure we took out a higher high. So that's step one. We swept liquidity. Step two, we need to make sure after sweeping the high, we are respecting a bearish gap. Okay, which we see here. Look to the left. This is a fair value gap. We've got 1, 2, 3 candles, the third wick high and the first wick low do not overlap, and it's left an area of inefficiency. Yes, it has been filled, but it's still valid. It's still valid. Now, step 2, or step 3, should I say, you need to make sure that the inversion is a singular bullish fair value gap. So when we zoom out, let's delete these lines, we can see market was making higher highs, higher lows. This was the higher low, and then this is the higher high. Because we are bearish, we need to make sure in the leg higher, so the higher high, there's only one fair value gap. The reason for this, we don't know if, for example, in this scenario, this was making a higher high. We have 3 FVGs. So we've got a gap here. If we zoom in to show you, there's a 1 gap, 2 gap, 3 gap. Yes, we inverse the first and it still is successful this time, but we don't know after inversing the first gap if we're going to hold or break past the second 2. So for high probability inversions that we engage with, it needs to be a singular bullish fair value gap, which it is. Now the final requirement, which is my favorite, and I've never seen anyone else talk about it, is a volume imbalance. Now, volume imbalance is the difference between a close and opening of 2 immediate candles. Now, on this screenshot, you can't see it because this is June, and the date of this was March the 20th. So we've gone back in time here. This is what it looked like on March's contracts. We inversed the gap at 14.14. My entry was obviously slightly later, but it was still based off this candle. And on the candle, what have we done? So we closed bearish here and opened lower on the second candle. This is a bearish volume imbalance and it indicates momentum. This is one of the most important requirements and will drastically change your win rate when trading these inversion fair value gaps. I promise you, I've never seen anyone discuss this. Now let's go back here. We've met every requirement. Let's just pretend it did inverse. Let's put this here. Now, stop loss placement. I mean, we discussed the SMT as well. That's the 5th requirement. You do want to make sure you got SMT driving the market lower, okay? That's like an additional. You can trade this without SMT. Now, in terms of exit, or should I say stop loss, sorry, you're going to close your position if the market closes back above the gap, which we see here. We almost did, but we didn't close above the volume imbalance, so I held the position. Now, the reason for this is when we're trading inversion fair value gaps, actually it's a little bit difficult because I can't see. Let's move this like this. When we trade inversions, we've just disrespected a buying pressure area. So we shouldn't re-break back above the inversion as it just makes no sense and we would want to get out the position instead of holding. So you can make your stop loss static or not static. What I would like to do is you choose between 10 and 20 points, whichever one is more comfortable for you to hold through it. Okay, you got to bear in mind, sometimes it's going to be a little difficult to hold through it when we're wicking all the way higher. So make sure you use lower leverage or at least risk management. Okay, this is probably your final target. I would probably recommend doing 20 instead of 10. But because I've traded them for a while, a lot of times when I trade these high probability inversions, it's just immediately going to go down to your next draw on liquidity, which is this short-term low. So press and play. We need to understand now, well, where's the target? We're in now. So we're inside the macro. We met every requirement. Press and play. The target and the draw here was, for one, we had equal lows. So this purple line was equal lows. 2, we had the 830 price beneath us. Now, the 830 perfectly got rejected, and at the same time, it left a low inside a fair value gap, which are one of the strongest draws on liquidity. I probably placed them just beneath equal lows, but both of these were so close to each other. So an A plus fair value gap with a low inside it, plus it was the 4-hour candles low. a lot of reasons to hold all the way down to this area. I did not even make this risk-free. I had full conviction we'd hit. And there we go. The final TP, 1 to 5, absolutely smashed. I hope you guys found some value today. If you want any concept that we discussed in today's video broken down in more detail, let me know. We're going to be posting all 2025. So make sure you subscribe and I'll be back very soon.